Yes, guys, hope everyone's doing well. And today I'm going to show you how to start investing in property as a complete beginner. Now, I get asked this all the time. How do you get started in property? What do I need to do? How do I set things up? I'm going to show you literally all of it today from someone that's been there and done it. So I was moving myself out of the way. What I'm going to do, I'm going to take you through a pretty big wireframe in terms of property setup, how to set your business up, the strategies that you should be going into. And at the end, I'm going to run through the next steps that you need to do. Okay. But first, let's go through who I am. Now, you might not know who I am. Most people won't. Some people might see me on Instagram. But ultimately, I went to the university after leaving school, studied geography. Like, what a pointless 3 years. Hated every second of it. I enjoyed the social life, but not the geography, digging up fucking soil and rocks in fields was just not my bag. So I always knew I wanted that little bit more. So when I left university, I went and worked in e-commerce. And then me and my two business partners, we started deal sourcing. So for those that don't know what this is, we'd find a deal, we'd find an investor, we'd partner them up, and we'd sell it for a fee. That then went really well, but then we wanted to start buying our own deals because we wanted to own property, because that's where you get wealthy. So we started doing that, and we raised £11 million in private finance, like you can see here. And we currently own £6.5 million worth of property. So HMOs, buy-to-lets, we are continuously flipping properties and trading properties, and that's just what we do. The current portfolio brings in about 65 grand a month gross. Net rent about 32 grand a month, and then obviously that's split out between business partners, it's reinvested, and all of this sort of stuff. I am the owner of the UK's most exclusive property network. If you want any more information on that, there's a link below to booking a call with a team. We'll literally give you the A to Z blueprint. You've got me in your back pocket for anything you need, and we have a lot of fun along the way in our events every single month. And then a bit of a curveball, I also own a software business. So one of my business partners, he sold a tech company for a lot of money, and we've partnered up and we are working on our own software. Now, all of this sounds great, okay? It sounds amazing, but most people will go, well, that's complete bullshit. You don't own property. You're too young, all of that stuff. So I thought I'd just chuck some proof in down here. So this is just one of my houses, 57 Stanley. This is a rent statement. So you can see the total revenue build across up until March. I'm due some more rent statements for Q2 to come in shortly. And if anybody wants those, I can send them across. But this is the gross rent that we get in. So 5.1. Let's just look at this last month. 5.1k. We then take off management fees, support worker costs, maintenance, any other bad debts, utilities, and responsive repairs, and we net about 2,286 across 57 Stanley. Go across to Palmerston. So this one, fairly similar story, between 4 and 6k in gross revenue. All of our fees come off, and then we have profit and loss down here. So you can see with this model that we do, it's very different to a standard buy to let. It's not as consistent in terms of 1 month you can get £1,000, the other month you can get £4,000. But when we spread it across our portfolio, where we've got 26 HMOs, it works really well. So there's some months where we're getting 1.6, there's some months where we're nearly getting 4k just on this one property. Another one over here, Hermitage, again, similar story. So hopefully this shows a little bit of proof in terms of income. And then if you want to check company's house, I own Melbourne Limited, Melbourne 1 Limited, Melbourne 2 Limited. We bought a house on Melbourne Street. That's why we named the company that. But you can clearly see we've got fixed assets of 1.2 in that one, 1.3 in that one, 871k in that one. And then we've got loads of other companies as well. So hopefully, I'm not chatting shit. So in property, what is the opportunity that you've got? Why do people want to get into property? Okay. And it's very, very, very important that you understand this. So let's go into it in a little bit more detail. The biggest reason why I would get into property, and the reason I do it, is for leverage. Because when you've got leverage in any business in the entire world, you've got opportunity. Within property, you can use mortgages, bridging lending to buy a property. So mortgages is a longer term 2 to 5 year product, and a bridge is a short term loan to get you into a deal as pretty much a cash buyer. Okay. This then means that obviously you only need a fraction of the total value of the asset to then control it, which is amazing, right? So for example, with 25k, you might buy £100,000 house, and you might have 75% of that on a mortgage, so 75k, and you might put 25k down plus some fees. So you can ultimately use leverage to your advantage to multiply your return. So if the property goes up 10%, your cash on cash return will be 30. So I'll just break this down for you. Here's this beautiful little house. This is not 57 Stanley, but it's a good little gaff. So let's say we buy it for 100K. 25K we need to put down plus fees, okay? And then we get 75K from the bank. The 25 that we put down doesn't have to be your money. In fact, I've never used any of my own money to buy any property that I've ever done. So you can raise this money from private investors, and I'm going to show you how to do that in a future video, but it'll just take me all day to do it right now. So 25K and 75K from the bank. If the house goes up in value to from 100 grand to 110 grand after 24 months, the debt that you've got, so the 75K, stays exactly the same. But your equity has gone from 25 to 35. So it's increased by 10 grand. So this means you've made 40% return, cash on cash, on your 25 grand within 24 months. So that's 20% per annum, okay? And for the people in the comments that might turn around and say, well, yeah, what happens if the property doesn't go up in value? Listen, we live in a world where there's so much demand for assets in the UK that Lloyds Bank, one of the biggest landlords in the UK, and buy 5,000 private residential homes, okay? The demand is so high, but the supply is so low. So hopefully this makes sense. But 25 in, if the house increases by 10K, you've got a 40% cash on cash return over 2 years, which is insane. And that's not including all of the rental income that you've had in that period as well. So you obviously get paid twice. So you get paid in the capital growth, which is up here, but then you get paid in the rent. So let's say this is a standard buy-to-let. It's doing 3 grand net cash flow per annum, okay? So 6K over the 2 years. Your total return on cash goes to 64%, which is insane. I don't know where else you're getting 64% return on cash, which is what ROCE means, return on capital employed. You're just not getting that. And this is why 90% of the world's millionaires are made through property investment. And like I said, the supply and demand is there. The demand is incredibly high. We've got huge population growth. Everyone knows we've got a massive, massive influx of net migration. And so the supply is incredibly low because targets are not being met by the government for building new houses, for increasing the amount of council homes. There's just not enough supply. And the UK is falling short by 50 to 100,000 homes a year. So this is just going to carry on. It's not going to get better. Planning restrictions increasing, meaning it's harder to build houses. All the things on the back end for a developer, meaning that they have massive warranties that they need to obviously adhere by. People are getting out of the development game. People don't want to build houses. I work with so many house builders that are coming out of that industry because it's just such a pain in the ass. So this is only going to get worse. So then let's look at how we set our companies up. Okay, so this is what a lot of people won't tell you. When you're in property, you want a group structure. So this means that you need a holding company. So you don't just buy a property in your personal name. You want to buy it in your limited company. And again, huge video. I will go into that at a later date. But let's just say I go to my accountant and say, I want to set up a holding company. So I set up Aston Holdings. Underneath this holding company, I then have all my other trading companies. So Aston Holdings will own 100% of the software company. Obviously, it doesn't because I've got business partners, but you get the point. If I own a deal sourcing company, Aston Holdings will own 100% of the deal sourcing company. An SPV is a special purpose vehicle. So if I go and buy a property and I want to put it in a limited company, that's just basically what it is. It's just a limited company. So I will split all of these out. And sometimes, like you'll see when I've got Melbourne 1, Melbourne 2, some of them have got 10 properties in, because that's just the way I wanted to manage my risk. And the same with my business partners. And then also might have another trading company up here. So Aston Holdings might own a marketing agency. And the reason you need these group structures is because there's tax-free movement of funds between your trading and your investment companies. Okay, so let's look back up here. If your deal sourcing company makes £100,000, in profit, what's going to happen is, if you want to then go and buy a house with this, you're going to have to you're going to have to pay your corporation tax, and you're going to have to draw it out with dividend tax. So you're getting taxed twice, essentially. If you have a holding company, you can move the funds between your companies tax-free. which is insane. So this is why you need a group structure. Obviously, this is not tax advice, but I have had tax advice, so hopefully it makes sense. Another reason why is because you protect your assets. So you're keeping your assets away from these trading vehicles and companies, and obviously you're doing the same vice versa. So let's say up here, my deal sourcing company gets sued for £100,000. If I've got my properties in this deal sourcing company, then they can go after my properties. Whereas if my properties are in different SPVs, they can't go after them because they're in a separate legal entity. So it's just protecting your assets. And then number two, if you want to sell one of the companies, so let's say you want to sell your deal sourcing company, but you've got 3 houses in there that you own, then it's going to be a nightmare because you might have to move these houses out and you'll have to pay stamp and all of these different things. So splitting the companies up underneath a group structure is an absolute must. Do this as early as you can. So hopefully that bit helps. Obviously, we then get on to the next bit of what strategy should I do? Like, oh, this is great. The company set up, all of this stuff is great. But what strategy should I do? Okay. Well, every man and his dog does a different property strategy. HMOs, rent to rents, buy to lets, flipping, trading, sourcing, sourcing SA units, all of this stuff. Okay. And you're probably sitting there thinking, I don't know which one to do. But you're not stuck because you are lazy, okay? You're stuck because you're overwhelmed. There's so much information coming at you. You don't know which one to go for. And this is a really bad situation to be in. So you're suffering with decision fatigue because you don't know which one to do. And you're not lazy because you've got information overload. So which one do you go for? The best way to look at this is to understand your lifestyle and your goals, okay? And we split these two things up into cash flow and wealth creation. So let's have a look. And most people won't tell you this. So there's a bit of a diagram down here. So again, we've got Aston Holdings up here. And Aston Holdings owns the cash flow businesses, obviously individually. This arrow's just there for illustrative purposes. But then Aston Holdings also owns the wealth creation business, which is the portfolio. So we have a cash flow business, and you need to choose a cash flow business that suits your income goals, your lifestyle goals. Certain things like if you're in a 9-to-5 job, people will try and put you down deal sourcing. It's probably not the right thing to do because you're not going to source many deals because you're in a 9-to-5 job. Okay, maybe auction sourcing might be better for you because you can do it at home. And not many people know about this strategy, and it's something that we teach our students. But it's an incredible strategy where you don't have to leave your house to do it, and people are making thousands every single month doing it. Maybe flipping is a good little cash flow strategy. It's not building your wealth because you're not investing the capital and getting income off the back of it every single month, but it's growing your capital pot, okay? What then happens is you build this cash flow business and this funds your lifestyle. So this gives you your fun money. This gives you your wage. This gives you your freedom where you can travel all over the world, okay? But then certain parts of this money will be stacked in the bank. So you can then use this, which helps fund your wealth creation business. And this is where we start buying assets. And by the way, you don't need this cash flow business if you have a good job. Let's say, for example, you get a job that's paying you $5,000 a month and you're living your dream life. Amazing. You can go straight into wealth creation business. So for the wealth creation business, I'd look at it in a few different ways. First of all, if you don't have any money, you then need to go out and raise capital. And this is not hard. There's trillions and trillions of pounds all over the world with people that need to spend that money. There's high net worth individuals that want to invest that money into assets or people. Okay, so you can go and raise capital. And like I said, I want to do a video on this at a later date because we've raised £11 million from the age of 22, which a lot of people think is crazy. Why would somebody trust you? But there's so many reasons why they would trust you. So many reasons why they would invest with you. So I'll go into that at a different video. So the wealth creation business, you're taking on debt because you're raising finance if you don't have any of your own. You then go and buy assets. You go and buy undervalued assets where you can add value to and then refinance on the back end and have a tenant pay the rent and service the debt from the mortgage. The cash flow business then comes into it because you might have 25 grand, let's say, in the cash flow business that you've just stacked there in a savings pot. This can then act as equity. So it could act as the 25% that we were speaking about at the start. If you just wanted to buy a standard buy-to-let and just put the money in and get a buy-to-let mortgage, or it can act as security. Because sometimes what happens is you'll buy a house using investor finance and you might lose money, okay? But you still need to pay that investor back because you're going to pay them back their money plus interest. So this acts as your little buffer where you can sell the house or refinance the house. And if there's a shortfall, you've got your level of security down here to pay the investor back. What might also happen is you might refinance the house, and instead of pulling all the money out, which very, very, very rarely happens despite what you see on social media, you might leave 10 grand in. So then you can just pay the investor back out of your security pot down here, the 10 grand. So you now own this house for 10 grand, which is insane. It's going to give you 3 grand a year in passive income. The net rent is 3 grand a year. You're getting like a 30% return on your cash from day one, which is insane. Where else are you getting that in the world? You're just not. And then what also happens is you get double cash flow, because as you build this portfolio that's paying you rent every single month, you then have your cash flow business making money every single month. So then you get cash flow from the portfolio, cash flow from the cash flow businesses, and that's when you get fuck you money. That's when you get the money where you build in long-term wealth and short-term cash flow at the same time, because the capital appreciation of houses goes up 3 to 5% every single year in the UK. But then you're also getting cash flow from the cash flow business. So you can live whatever life you want, and you're building long-term wealth for your kids, for your family, or just for yourself, whatever that is, okay? So this is what I've been looking at. I'm starting today, I'm building a cash flow business and a wealth creation business. And just one point on this cash flow business. People think that the cash flow business has to be property. It has to be deal source, and it has to be rent to rent. It doesn't. If you are good at marketing, why don't you have a marketing agency? Why don't you be a freelance marketer? If you are really good at editing videos, come and edit my videos and I will pay you. If you're really good at building websites, go and build websites for the property industry. All these different things. If you've got a current skill set, why try and learn something completely new in terms of a cash flow business when you've got something that can generate you cash? Or if you're in a well-paid job, just stay in the job. Build the long-term wealth, increase the cash flow to the point where you can leave that job. Don't be rushed into leaving your job. What I'll go on to next is just a few mistakes to avoid, okay? Analysis paralysis. Honestly, the amount of people that do every single thing perfectly right, but they never buy a house. The best way to learn is just to go out there and buy a house. It's the same with anything. Best way to learn how to run is to go and fucking run, okay? Best way to learn how to drive, you don't sit there and fucking practice how to drive behind your TV screen. You get in the car, you put it in first gear, and you fuck off. Like that's the way you do it, and that's the way it needs to be. Obviously, it's an investment. We're talking about large amounts of money, but you can control your risk. If you have the knowledge, the education, the strategy, the guidance, the support, you can control that risk. Also, overpaying due to inexperience and bad guidance. This happens all the time, especially on refurbs. Ignoring due diligence and buying houses with emotion because it's near your house, or you like the look of it, or you feel like it's a good deal. Ignore that. You buy on numbers only. Numbers are the thing that guides whether you buy or don't buy a house. Simple as that. People also don't have a good network. They think they can do it on their own. I always say your network is either your edge, so it's going to get you somewhere better, it's going to give you more knowledge, it's going to help you, or it's going to be your anchor. If you're surrounded by people that aren't driven, aren't motivated, don't want to be in property, and they don't like the fact you're getting into property, remove yourself from that situation. You have to have a good network to get anywhere in property. Over leveraging, listen, we see it with 100% mortgages. Over leveraging is just bad news for everybody. Let's be honest. One of the beautiful things about property is that you can leverage, but if you over leverage, you're in deep trouble because things will happen in the future, which means if you are over leveraged, you're in serious shit. So don't do that. Also, if you've got poor cash flow or no cash flow business, if you were going to go full time into property, you don't get paid very quick from property. It's not like setting up an e-com store or doing crypto. It can take you 6 months to get paid, 9 months, 12 months, 2 years, 5 years. I've got a site where I won't get paid for 2 years. So I need something as a stopgap in the middle that's going to cash flow me. So my other cash flow businesses, and this is why splitting the companies up into 2 different things is so important. If you don't have a clear strategy, or any guidance, you're going to make no progress because it's super easy to sit there and go to a viewing, scroll on Rightmove for 10 hours a day. Like, this is the worst thing you can be doing. You need a clear strategy of KPIs that you want to do every single day. Go and do them, deliver on them. And then the last thing is trying to time the market. Like, people were trying to time the market in COVID. Oh, I'm not going to buy. I'm going to wait till the crash. I'm going to wait till the crash. What happened? Market went the opposite way. Literally, the market absolutely boomed. And the people that bought at the start of COVID are absolutely laughing right now because they didn't try to time the market. All investors that are really good investors, all they're bothered about is time in the market, not timing. Next thing I'll go on to is how I'd start again from zero. So I'm starting again from zero. So I'd build my network of fellow property entrepreneurs and winners. So the more people you've got in your circle is an absolute cheat code. People have been there, they've done it, they've seen it all before. I own the AFPI network, literally the most exclusive property network in the UK. We can help you. Let me know if you want to call. Link is down below. A lot of people, when they come into property, they start focusing on deals. They go on viewings, they go on Rightmove. The complete opposite is what you need to do. You need to spend 100% of your time focusing on investors, because whoever has the most investors in property wins. Because when you've got an investor, you can sell them a deal and make a fee. So your cash flow business, you can raise finance and go and buy your own assets. So then you're building your wealth creation business. If you have loads of deals but no investors, you can't monetize it. You can't buy the deal. You can't sell the deal to an investor because you ain't got any. You end up working with co-sourcers. And we all know 99% of deal sources in the country are absolutely whack. So you don't want to be doing that. I'd focus on raising finance from the get-go. People think this is a new strategy. Like, you're not reinventing the wheel. Like, the biggest corporations out there have portfolios of 500, 600 billion. Okay. And they've raised 350 billion to build that portfolio. Just go have a Google. It's simple. You can find it out. It's not reinventing the wheel. Everyone does this and everyone should do this because it catapults the growth so much quicker than you could ever believe. I'd be building a cash flow business from day one. I wouldn't focus on holding property too early in your journey because there's so much pain. If you put 25 grand and that's all you've got down to a buy to let, yeah, and the boiler breaks and you've got to stump up X amount, or the roof comes in and you've got to stump up 5-10 grand, it's a pain in the ass. What you need to do is build your capital pot. So with that 25 grand, I'd be using investor finance, a bridge, flip houses, flip till you get to 100, 200, 500 million quid. And then I'd invest that capital. I'd go all in on direct to vendor letters. So I'd package letters up throughout the week. At the weekend, I would go and post them to every single house on a street where I wanted to invest. I post 1,000, 2,000, 5,000 letters every single weekend. So you get off market deals. So you can either sell them, you can put them into auction, you can buy them yourself. One of the biggest things that I see in property is people, especially our generation, like, people don't want to put the work in. So irrelevant of your starting capital pot, if you've got zero, if you've got a million quid, you need to outwork everyone. This is why I've got to where I've got to. This is why my business partners have got to where they've got to, because we'll outwork anyone. We'll do more work than absolutely anybody in this entire country in property. I can guarantee that. Every single night, I'm up to ridiculous hours working on the business because no one's going to beat me if I outwork them. It's as simple as that. And then you need a good power team. Solicitors, builders, project managers, accountants, brokers, whatever that is, investors, people in your close circle that can help you and you need guidance. You need this power team because it will save your back every day of the week. So what are the next steps and actions that you can take off the back of this? So the first one is stop thinking and start doing. Property is always going to be there, yes. But I think you've not actually got that long. I think you've got 5 years maximum to build a good portfolio. The big corporations are coming in, they're buying up all the houses, and the aim is so you own nothing and they own everything, okay? The more you scroll, the more of your life that you're wasting, the more times you're sat on YouTube videos like this, watching me, the more time you're wasting. Yes, it will educate you, but get out there, invest into education, speak to people, go to events, do all of this stuff, but then start. Go and raise money, go and source a deal, go speak to an investor, have calls, go and speak to estate agents. All of that stuff to start tomorrow. It's very, very easy. And life is a game. It's one of the favorite things I ever say. Life is a game. You may as well play it. There's so many people out there playing this game, okay? But there's more people out there that are getting played. And if you're one of them people that's played at the minute, that should piss you off because you are getting played. So go out there and play the fucking game. And if you want any more information, there's my Instagram. Go drop me a follow. I post my daily stuff on there, anything I do, deals that I've done, bits of advice. And if you want to book in a call, hit the link down below. Have a good one.